This is the phase 4 review for one and done, our strategy to build consistency and discipline as a day trader, created by my mentor and coach, Pat Mitchell, over at tricktrades.com. Check him out if you are new or struggling with day trading and want to learn how to do this on a professional level. But yeah, so this is, like I said, our fourth iteration of one and done. Go ahead and get the chart here up in a second. Trying to think back over it. It's been an interesting one. This one was a little bit longer because we're doing a study right now and we need some baseline data. So there was 5 paper trading days, so 1 week. So that's why this one was a little bit longer, but those don't count. And I'll point that out on the chart here. But all in all, good stuff. So let's go ahead and just kind of jump right into it. All right. So as you guys can see, we've done our 4 phases on the chart here. See my 2 little like stumbling blocks before we really started getting into one and done. Started playing around with it right in here, then committed to it and have been doing it in earnest ever since. So as you can see, uh, phase 1 we did for 30 days or 30 sessions, and then phase 2, 3, and 4 we've done for 10, with the caveat of there was an extra 5 in phase 4 due to that paper trading. So with phase 1, we started with 1 to 3 contracts, phase 2, 2 to 4, phase 3, 3 to 5, and then for phase 4, we were doing 5 to 7. So we've had a total of 60 trades throughout this entire uh, session, or this entire kind of program that we're doing, and 58 green trades, 2 red trades, and I would say no missed trades, at least planned missed trades. And that gives us a 96.7% hit rate. So to me, that's pretty phenomenal. I'm not sure how else to put that. That's pretty crazy. But again, that's a testament to Pat's strategy as well as his trade plans that he gives every morning, plus the lessons and everything. He really does know his stuff. And again, this is just proof of it. And again, even one and done. And another additional aspect to one and done is generally it's one and done. So you just do that one singular trade plus the first trade to trigger, regardless of what trade that is. The first trade that triggers inside the trade plan or what is prescribed in the trade plan. And again, that proves that that just numbers don't lie. Uh, so again, over the course of this phase, I'm trying to think of anything that was uh, really, again, jumps out at me. So probably the biggest takeaways for me on this one would be trade or execution timing is probably one of the bigger ones, and that is extremely important. And both creating or entering, adding, averaging, correcting, as well as paying yourself. Now, it's one of those things where if those are sloppy, you can actually again skew things pretty heavily against you, miss out on a good amount of opportunity. And again, this is more in the effort of trying to maximize the potential of every trade. But again, as we're going through the process of building up a smaller account, sometimes it's just nature of the beast. You can't really do that because, again, your size is kind of limited and controlled. You can't, again, necessarily do that, but we're starting to transition into again using more size and the ability to again leave one on while trying to tune everything with the initial like size in terms of getting into a trade and paying ourselves properly into targets. So again, I would say those are probably the 2 biggest things I'm taking away from this phase is adding, averaging, correctly, again, precisely, as well as paying precisely on targets and really refining that, as well as again the concept of like leaving one on that very last contract to again kind of see where it goes, because you'd be amazed at again what leaving, say you're traded 10 contracts, you saw 9 of them, you leave that one, it's like you'd be surprised at how much that one can actually actually turn into in terms of payout and some of these moves. but you got to give the right size and the right buffer because you never want to, again, one of Pat's rules is never turn a beautiful green trade red. So you need to have kind of that buffer to work back a little bit, and you never want to give up all of it. At that point, if you're going to be doing that, what's the point? That would have to be a really, really high probability, extremely high reward with really limited risk to do that. So, kind of going over the chart, as you see, we had that one loss here on phase one. We had one loss here on phase two. No losses for phase three. No losses for phase four. I know it looks like there was something here, but this accumulation right here was the paper trading. And then I reset the account back down to when we switched back to live to where it was because it was tallying these trades for how we were tracking that data. So again, just log that back out and then have gained it. Again, working myself back again, just continuing along. So it's one of those things where it's like you almost can ignore this portion right here. Now, the interesting thing is like, again, even the paper trades, those 5 paper trades we did for last week, all those were green too. So kind of just rinsing, repeating of, again, what's happened on the chart. So all in all, very good, very happy with the progress. I would say, again, going back to, again, things to take away is, again, sizing. Um, for me, size has always been probably one of those hurdles of getting size in, getting size out, building a position. I've always been scared or skittish of size, and I definitely feel like I'm better at it. There's still some room for improvement there, and the P&L kind of reflects that. Even though it's like I don't know if I want to necessarily use that as a metric because you shouldn't be chasing money. If you're chasing money, you're being greedy. It's like you're gonna get slaughtered in these markets. And sometimes market conditions means sizing down. That's the other thing. Sometimes you need to pull size out to protect yourself, protect your account. It's just again kind of nature of the beast and where the markets are when they're in these kind of conditions and trading around all-time highs with elevated volatility. Okay, yeah, it's one of those things where you should probably be a little bit more cautious. So, with that being said, phase four, 100% hit rate, and I got again really nothing else to add about the phase itself, other than again just try to trade again, don't try, but trade to trade well, do things appropriately, follow the process, follow the plan, follow the strategy, do all those things, and be a bit more robotic about it in some sense. Keep the emotion out, but it's interesting nonetheless. So now the question is, where do we go from here? So let's go ahead and find ourselves a little bit of space. So let's talk about phase five. Okay. So this one's going to be a little bit different in the sense that we're now going to be coming up to from 5 to 7 to 7 to 9 contracts. So where I am with the size up program, which is the program Pat put together to help new and starting day traders go incrementally build themselves up, build their accounts up, learn each and every like step incrementally to help get up to that professional level to where this can provide again a good income. Uh, where I currently am, my limit on that is actually 7 to 9 contracts. So we're coming up to that. So at this point in time, it's going to basically, in terms of like a duration, it's going to be basically open ended. So I would say, uh, instead of doing 10 trades, it's going to be basically for indefinitely. And that's just kind of where we are. Now I am closing in on the next step up, which would bump this to, if I'm not mistaken, will turn into 9 to 12. So what I am thinking is that we're going to continue along with this, do it for, let's go with, say, do I have an erase button? There's my erase button. Oop, and that took away everything. Let's not do that. So instead of necessarily like doing infinite, I'm gonna say we're gonna continue this and for okay, let's say 10 trades. So or again until basically, I don't know, when we get to that next step, it might be longer. So 10 trades plus. Should we probably just take this out, redraw that. So we're gonna do it for say 10. Actually not. Let's go with 15 trades. Because another aspect of this that works, like once your account balance in the size of program hits that minimum threshold to go into the next step, you don't get to automatically go into the next step. Pat has to basically grant what we call a size up day to where you can, if you qualify, move up to that next step. So it's one of those things where, again, in that 15 trades, if I hit the minimum required balance to do that, but he doesn't grant the size up day, obviously he's still going to be trading in that level, at that level, which is all good because it's one of those things where, again, can still focus on fully utilizing, again, the 7 to 9 contracts, building up, again, the emotional calluses to where this doesn't have any kind of emotional impact whatsoever. And again, preparing yourself for, or myself for the next one, which is that 9 to 12 contracts. So again, this is all, again, like kind of good stepping stones to kind of being at the upper end of, again, kind of getting caught up, getting one and done caught up with where I am in size up. So with that being said, it's one of those things where it's like that's probably the best way for me to approach that because again, I think 15 trades would be a solid amount of time to get to the uh, minimum required for the next step. And then if a trading day or size up day is granted at that point, take advantage of it. If not, all good. Then this will just kind of keep going uh, until then, basically. And then once we get into that next step, I will probably kick this one off as phase 6. That way it kind of keeps everything separated a little bit. And then just kind of seeing how it goes. Yeah, again, it's one of those things where, again, I still have, there's work to be done. And that's all good. And just because I can take this amount of size at that next step doesn't mean I will be. I really need to see how, again, things go in that regard. If I'm struggling to get 7 to 9 in consistently, doesn't matter if you give me 9 to 12 or 100. It's like, well, I was like, it doesn't matter if you're struggling to get hit again these levels. It's one of those things where, yeah, or again, it could be just market conditions say do not be throwing a crap ton of size at trades right now. That could also happen. But all in all, again, as you can see, it's let's try this again. Wants to kill that and that. Better. So as you can see, again, through one and done, it's been a very consistent curve and it's starting to, again, kind of take on that more rounded shape, which is kind of what we are looking for ultimately, because it's kind of that getting to that point where it's, again, should be going into that acceleration process. And you'll see the angle of the curve kind of start getting more extreme to a degree. It shouldn't be wildly extreme, like completely just go parabolic. If you do, then that would be really weird in terms of like what is going on. Um, but it should, again, should just kind of see that incremental kind of angle change. So again, it's one of the things I'm going to keep an eye out for. And yeah, hopefully that will be what we see. And trying to think of anything else to really add on to this one. It's pretty straightforward. Emotions have been good. Discipline has been good. I want to say I haven't really been this consistent for quite a while. As you can see, some other places on the chart where again there was a decent amount of consistency, but in these later again or earlier phases or steps of the size of the program, we definitely had some struggling points. So getting that kind of put behind us and hopefully building enough muscle memory and experience and really tweaking and refining is really going to make the difference here. And I think it is. It's just it's made a difference to where I was to where I am now. And then it's the continued application of those things to get from where I am now to where again we can be. And again, don't try not to be a super perfectionist about it, but again, there is room for improvement there. And I recognize that in myself. So, with that being said, like I said before, phase four, 10 trades using 5 to 7 contracts. That's for max size. Again, 100% hit rate, 10 green trades, no red trades, no misses. And our total so far is 58 trades or 60 trades taken, 58 wins, 2 losses, and no missed for a hit rate of 96.7%. That is phenomenal in my mind. And if you told someone that was kind of attuned to trading and things like that, they'd probably call BS on you the moment those words came out of your mouth. Like, I don't know. I don't know how else to put it, but yeah, it's interesting. I'll put it that way. But that's a testament to Pat's strategy, his approach, his training, his experience, his lessons, all of that, and it's a world of difference. So again, if you're interested in learning from him, again, check him out over at churchtrades.com. That's more or less all I have for this one. But yeah, let everyone get back to their day. Thanks for watching, and we will catch you tomorrow for the beginning of phase 5. Have a good one.